What's up, guys? I'm Mike from StockedUp, and welcome back to the Stocks with Mike and Tom show. Today was crazy. The market gapped up a little bit, had a ton of fake outs in the morning, ran up during the day, and then absolutely, I'm not going to call it crash because it didn't crash, but it fell really quick, just out of nowhere off of Trump's tweet in the middle of the day today. So in this episode, we're going to be covering what happened in the market today, why the market fell. We're going to go over all of the other news today and all of the plays for the rest of this week. We are in such a volatile market and we have a lot to talk about in today's video. The market's just crazy. I was watching the market fall in real time. Now, I couldn't even believe think or swim. It was like a 2% fall on the QQQ in like 10 to 15 minutes, which is pretty crazy, but we have a lot to go over in this episode. So if you guys aren't subscribed already, don't forget to subscribe to see our daily videos on your YouTube homepage every single day. But let's get right into it. So Tom, what happened in the market today?
Yeah, it was really crazy. This move was really unexpected. And in a tweet this afternoon, President Trump said he's calling off stimulus bill talks until after the election, since both sides cannot find an agreement. The tweet is kind of long, so please bear with me. But he tweeted that Nancy Pelosi is asking for $2.4 trillion to bail out poorly run high crime Democrat states, blah, blah, blah. Pretty much he just goes on and on. I'll go ahead and bring up the article so you guys can read the tweet if you want to, but I'm not going to get into it because he gets kind of political. But it's just really crazy that this tweet caused this type of move in the market today. And this move was really insane, guys. Like, as Mike said, whenever this was happening, it was almost like flash crashing. Like just in the middle of the day, just really big red candles very quickly. And whenever you see like 2% drops on the SPY and the QQQ that fast, it really sets off a lot of red flags. And it really like messes up a lot of like high HFTs, high frequency traders. A ton of different things get kicked into place whenever the market starts dropping like that. And it just causes more sells, more sell-offs and more sell-offs. But just keep in mind that whenever the market does drop like this, sometimes you see a nice green day after this. So just keep that in mind too.
Yeah. So, well, Tom, the main thing from his tweet is because he told his team, we're not going to have a stimulus bill until after the election. And that's the main reason why the market fell. Where is he saying this, Tom? He said that we are not going to even negotiate until after the election. Where is that? Okay, yeah.
It's right here. I have instructed my representatives to stop negotiating until after the election, when immediately after I win, we will pass a major stimulus bill that focuses on hardworking Americans and small businesses.
Yeah, so that's the main reason why it fell. Obviously, it's not good to have it wait, but the election is coming up. We're not going to get into politics, but that's why the market fell. It's because they're going to wait to pass a stimulus until after the election. But then back to like Tom was saying with how everything fell so quick and talking about HFTs. So guys, there are I would say about 70% or more of all the volume traded in the market is actually traded by computers. So you always think you're selling against someone else or an institution, but most of the times when you actually buy or sell, you're actually trading with a computer. So over the years, computers have taken over more and more of Wall Street's volume. So they're trading more and more. And basically what happens is computers are so much faster than humans. So the second Trump tweeted that this was happening, the computers analyzed it and saw that is not good for the market. And that's why the market fell so quickly. So that's just a little, I know too many people don't know a lot about HFTs, but there's this great book called Flash Boys that goes more in depth into that, but it's a pretty interesting topic. And I know a lot of people don't know too much about it, but it's pretty important. So Flash Boys is a pretty great book if you want to learn more about HFTs. So we're not going to get too much in depth in HFTs in this episode, but what else happened today?
Yeah, I just thought it was crazy. I know that the market overall was down, but even though that it was down on a daily setup, a lot of these stocks almost looked like that they were bound to go down anyways. Like Facebook, we can see that it almost looked like it was going to be tapering off here, and it ended up down around 1.6%. Alphabet dipped 1.7%. Boeing was down even 6%. And they even had some bad news going on lately as well that I heard some people talking about in Discord. But you can see that they dropped in the morning and at the end of the day off the tweet. So Boeing really got killed today. It's just crazy to see that all these big stocks are going down. And really, I mean, I know I said it's crazy, but it's almost like that whenever you trade the markets for a while, you understand like that the market ebbs and flows. It's almost like a business. The money is not always pouring in. The cash flow ebbs and flows, and the market does that too. And right now, it almost looked like that these tech stocks were up way too much, and now we're just starting to see them kind of come back down, and it's just going to drag the QQQ and the SPY down with it if it continues.
Yeah, I mean, we're in such a volatile market, and Tom, like we've been saying this for 2 or 3 weeks. Like we've been saying the market has been so volatile, and obviously it is very volatile, but I don't think this volatility is going to slow down until after the election. I think we're going to have a lot of black swan events just like this until the election. And if you guys don't know what a black swan event is, it's basically an event that is unpredictable. Like no one could have predicted that Trump was going to tweet, "Hey, we're not going to. I'm going to tell my team not to negotiate with the Democrats until, like, on the stimulus bill until after the election." Like, no one could have predicted that. So that's called a black swan event, and we are probably going to see a lot of those. And they're unpredictable, and they usually move the market very significantly, but also very quickly. So keep that in mind. And to like trade in this market, risk management is so important. Like I'm sure a lot of people were holding calls. We could see that the market was actually having a decent day before it fell, and I'm sure a lot of people were in calls, and they're probably still in them. And just whatever your strategy is, just make sure you have stop losses. Make sure you're managing your risk, because now is one of the hardest times to trade in the stock market. Like after the election, all trading should get a lot easier. But we'll see. We're in a very volatile time. Did anything else happen today?
There wasn't really anything too important, but this morning, Jerome Powell actually spoke, and CNBC reports that Jerome Powell calls for more help from Congress, says there is a low risk of actually overdoing it. So he says that pretty much if Congress gives them more money, it's not going to do anything except help the market, because sometimes people say, you're going to give too much money to the markets and, cause the U.S. to go too far into debt or something like that. But he says there's a really low risk of actually overdoing it. And he also said that we have a long way to go in the market. So it just seems like that Jerome Powell also thinks that the economy is not doing well. And it just seems like over the past few weeks, stocks have been reflecting that. And I know that ever since the virus actually happened, the market crashed down really quickly, and then a lot of stuff really recovered or even over recovered. So just keep in mind that even though a lot of things over recovered, there is other stocks like bank stocks like Bank of America and JP Morgan and Citigroup and all these other stocks that did not recover as much. And that should show a pretty good sign to people that the economy really is not doing the best in the world. Because if it was, these bigger stocks like JP Morgan, Bank of America, Citigroup, and all those big banks would be doing a lot better than they are right now.
Yeah, tech stocks are really kind of like the top dogs of the market right now. I mean, look at the Nasdaq compared to the Dow. Like the JP Morgan, Bank of America, the bank stocks, they're not doing too good right now. So tech stocks are definitely the way to go. But yeah, there's a lot of volatility. So now let's get into our Discord member of the day. And today's member of the day is Harry. So Harry is one of the funniest members of the chat. He's always in the chat, always posting setups and sharing jokes and things like that. So shout out Harry for being our Discord member of the day. And now let's get into our momentum plays for tomorrow. And we are looking at GOLD. So Barrick Gold. This one's down about 4.5%. Tom, what levels should we be watching?
Watch for it to go ahead and fall below the $27 mark. And I do know that Warren Buffett was holding a long-term position on this, I believe, also.
Yep. And then again, we're watching it to the downside. Next, we have Facebook, which is FB.
Facebook, make them fall below 256.
All right, so if we fall below that, again, we're eyeing it to the downside. And then we have BA, which is Boeing.
Boeing, hang on, I typed in Baba.
Uh,
Boeing, make them fall below 159.25.
Yep, again to the downside. And Boeing had a pretty bad day today. I know you were talking about it earlier, but they're down almost 7%.
Yeah, that was a really bad move this morning, actually, on Boeing. I'm going to try to look up what happens. It says pilot accused of lying about experience to land British Airways job. I'm not sure that affected it, but yeah, the news on Boeing was really crazy today, and really, it's nuts to see the volume on Boeing. Like if you look at the intraday chart, you can see the big volume bar earlier in the morning before Trump even tweeted. So I wonder what that was all about.
Yeah, I saw a couple news articles on Boeing today. They were forecasting challenging. Where does it say? Significant challenges in the commercial aviation due to the pandemic. So there's a couple reasons why Boeing fell.
Yeah, it's going to be tough to get their new 737 Maxes back in the air and stuff like that too.
True, true. And then with the last momentum play, we are eyeing V, which is Visa.
Visa, watch for that one to fall below. Really just watch for it to fall below 199.50. Or you can even if it falls below that in pre-market, then go ahead and watch for it to fall below 198.40. But just keep in mind that if it falls below 199.80 or 199.50 in pre-market, then make it fall below 198.40.
All right. So now for the unusual options activity for tomorrow, and we are looking at a $28.2 million option today, and we're looking at the Apple 115 strike call options that expire this Friday, October 9th. And like I said, there was about $28.2 million put into this play. But before you guys, go ahead and buy Apple calls, don't do that. Just like stocks with options, you can either buy the options or you can short them. If you buy the option, you want the option to go up in value. If you short the option, you want it to fall in value. So for example, with this Apple unusual option, I think that the smart money behind it is shorting these options. And I say this because the market had a horrible day, and to put so much money into an option that is it's about $3 out of the money right now, and it expires in 3 days. So it like the risk reward just doesn't line up. And I think it would make a lot more sense for anyone who's either shorting these options or who has a ton of shares of Apple. I think it would be a lot smarter to just short the options. Like for example, if they have a ton of shares of Apple, they could short the options as a covered call, and they could collect a ton of premium. So I really think they're shorting these options, at least as of right now. Apple's still falling in after hours. So in my opinion, it's looking like Apple is going to fall for tomorrow, but that can change at any moment. If another black swan event comes out in the middle of the night, then that can change instantly. So, but as of right now, it looks like Apple has some room to the downside tomorrow.
Yeah, and I've actually had some members come to me and say that they've been holding some Apple calls for the long term, like some January 20th Apple calls or something around that time. And it just right now, I would not really hold those. Holding calls right now is going to be one of the worst things to do, because if the market goes flat or starts to go down, it's going to take a lot of movement to really get back up to even break even on those calls. So I think that right now on long-term calls, just be really wary, especially on these big tech stocks like Apple and Tesla and stuff like that, because they've recovered so much that they just have more room to fall almost.
Yeah, like if you're someone who, might think that, this is just a little dip in the market and we're going to keep soaring, that's fine. Just it might be smarter to buy shares right now rather than calls, because with options, you're fighting time decay. So like even if you get like a call option and the stock or whatever you're trading ends up going up in the long term, you can still lose money on it depending on which strike price and expiration you bought. So each scenario is different, but depending on what your goals are, it might be smarter to just buy the stock instead of the options. All right, so now for our comments from the previous episode. We have Dave B saying, any thoughts on SQ and FSLY? I just started a position on SQ and will probably do the same thing with FSLY very soon. So let's take a look. So Square and FSLY are both doing amazing this year, right? They're doing great. They're in the tech sector. I just think it's very risky right now to hold these stocks. One, we're heading into an election, but also what happened in the market today. Like, I think they're great companies for the long term, but I just think they're really risky right now. And I think, depending on how many shares you're looking to pick up, I think it might be better to just go with the cash secured put strategy. Basically, like if we look at like FSLY, you could sell like an 80 strike put for, X amount of dollars. And then if it goes below 80 or around 80, you'll just have to pick up 100 shares at $80. So I don't know, like everyone's scenario is different, but especially looking at Square, it's at all-time highs. It broke all-time highs today. I just think it's a little risky to get in right now. What do you think, Tom?
Yeah, I think it's really risky too. I mean, if you look at from the low of their swing, which was at the very bottom, I mean, Square is up around 450% from the beginning of March. That's just insane. So just keep in mind that if the market does start coming down and the SPY and the QQQ do fall, like let's just say another 15 or 10%, you might see Square pull back maybe 20 to 30% in that case, given that it's went up 450% this year alone.
Yeah, yep. And then we had Augustine saying, can you guys analyze SEDG? Let's take a look. What do you think of this one?
Yeah, this looks almost similar to Squared. I know it's not the same thing, but similar setup with it being up being up extensively this year alone. And it's all the way up to 275. And really, I think that the way it's went straight up here, that if we do start seeing red in the market, this stock's going to also pull back. I would almost start looking at selling puts on this or not selling puts, buying puts on it. Sorry about that.
Yeah. All right. Then we had Arvin saying, can you please share your opinion on Domino's earnings as I have a call? So DPZ. Tom and I hate playing earnings plays because even if you predict the direction correctly, you can still lose money. So we almost never play earnings plays, but looking at it, I mean, I don't love the setup. I mean, one, you have an earnings setup, which, just instantly puts the odds not in your favor. But then two, looking at Domino's, like I don't even like, even if it does go up, I don't see it skyrocketing up. Like they already went from $270 to $435 in the past year. So I don't love the setup. Personally, I would never get in this, but it just depends on your risk tolerance. What do you think?
Yeah, I personally wouldn't get in this either. I think that there's just a lot of other opportunities in the market right now. And really, if you wanted to get into Domino's or something, just wait a little while. I think that if you just wait a little while, especially after earnings, I think it could help. They've had good earnings since the virus came out, but really just keep in mind that like if you're trying to play options on the earnings specifically, that like Mike said, it just almost never works out. So we just never like to touch anything with earnings.
Well, it's not that it never works out, just the risk.
Yeah, it's very rarely.
Yeah. Well, like the thing is like what sucks so much about earnings plays, in my opinion, is like if you do a good enough job and you're able to predict the direction correctly, like the fact that you can still lose money, like for example, like let's say like Domino's has an expected move of like, let's say like 12%. This is just a random example. And then like, let's say you buy calls and it only goes up, 5%, you'll still lose money. And that just, in my opinion, it's just stupid to do that. Sometimes they have a huge earnings beat and, the options will explode 1,000%, but it's gambling and it's not for me.
Yeah. And sometimes you might even see a pre-market move of like 20%. And then whenever the stock actually opens up, it's only up 5%. And then,
right.
And it happens all the time. And it's just something that we see it happen so much that we know that sometimes that the earnings can really be beaten, but we see it too much traders just lose money trying it.
Yeah. All right. We had Benjamin L saying, I have learned a tremendous amount of new things since finding your channel a week ago. You stopped me from executing some bad entries. Thank you for your work. So thank you so much for that comment, Benjamin. And thank you so much to everyone else who left comments down below. All comments help us grow the channel. So thank you guys so much for that. Tom, do you have any last minute stocks, options, or any insight for the market for tomorrow?
Man, the only thing that I'm looking at for tomorrow is going to be VXX calls. If the market continues down, this stock can really go up. And I'm going to be looking at this maybe for a potential day trade tomorrow. It'll be an awesome trade if it does actually work out, because if the market continues down, VXX loves to pop 5% or 10% within a given day. So that's why I really like this for tomorrow.
Yep, VIX, absolutely. So thank you for sharing that. And thank you for everyone who watched this video to the end. Tom and I really appreciate all the support through the form of hitting that like button, commenting down below, and of course, all of our new subscribers. If you guys want to try out the new options day trading bot, you can click the Stocked Up Options Alerts link in the description down below. They had some pretty good plays today. I was calling out Apple puts really early in the morning. So if you guys want to try that out, it's the Stocked Up Options Alerts link. And if you guys have any comments, let us know in the comments down below. But other than that, thanks for watching.